It's time to kickstart your portfolio check segment, and as an expert today we have Anant Ladha, founder Invest Aaj For Kal, joining us. Anant, good evening and welcome to the show. Let's start with the queries directly, and I have Madhusudan Hora who says that he's invested 1.5 lakh in Tata Digital, and in past 3 months has lost about 6%. He wants to know if he can average out this purchase, and given the present valuation, will that be a right decision or a step towards his portfolio?
Firstly, good evening and thank you so much for having me on the show. This investor is particularly investing in a sector fund. Whenever anyone is even planning to invest in sector fund, minimum time horizon has to be above 5 years. We suggest that you should minimum have time horizon of 7 years, but 5 years is bare minimum. So if you are investing in a sector fund and after 3 months, just because your particular fund is down, we cannot redeem that fund. And obviously, the kind of fund which he's talking about, SIP, is the best mode. So he will have to time and again do SIP or regular top-ups in order to ensure that he averages out his price and makes most use of it. One important thing is that you should not redeem your sector fund. See, firstly, I'm assuming that you have chosen a sector fund after properly looking at your risk profiling and suitability. Minimum 5 year time horizon you have to give. Otherwise, it will be like that you have taken Delhi to Bombay flight, and just because there was some turbulence in Jaipur, you jumped off the plane. You can't do that. So you need to stick to your time horizon.
About this fund, what exactly is this fund and how does it operate? What's the portfolio composition like?
Portfolio is majorly into IT sector. It's a good fund, stable fund. I would not say that it's super aggressive looking at its category, but it's a comfortable, stable fund with more than 5,000 crores of corpus.
What kind of investor should actually diversify their portfolio into these kind of funds?
Sorry, I didn't get you.
What kind of investor can use this kind of fund to diversify their portfolio, Anant?
An investor who is looking for aggressive fund and who has minimum experience of 3 to 4 years of investing in mutual funds.
All right, let's move on to our next query, and that's by Anand Ubhe, and he says that he's an NRI residing in Canada, and it's been 2 years since he's shifted there. He's 30 years old and has made a certain portfolio, it's saying, for the purpose of retirement, which is 30 years later. The kind of funds he has in his portfolio, Anant, are Edelweiss Greater China Offshore Fund, 8,000 rupees SIP, Nippon India Large Cap Fund, 8,000, SIP Invesco India Large Cap Fund, again 8,000, Axis Gold ETF 5,000, and he's got retired parents who are dependent on him, and he also has to send them 30,000. That's the monthly amount given to his parents, and he wants to understand if he can really accumulate 10 crore for his retirement out of this portfolio.
Before going on to the queries, there is one important point. Investor who invest from Canada to India, there are a lot of restrictions in terms of fund houses.
Right.
Do ensure that you properly take care of all the compliances. Otherwise, at times we try and find some loopholes in compliance and take a shortcut, but it's better to complete all the compliances.
So since you've mentioned this now, could you also just highlight the compliance issues or the things that the investor needs to take care of?
The first and the biggest compliance is that you have to be present in India whenever you are starting your investment. Plus, there are a lot of restrictions when you invest in SIPs. Better is to put a lump sum amount in a liquid fund and then do STP, especially if you are investing via Canada.
All right, let's move on to his funds.
Now,
yeah.
Now moving on to the query, he is having 2 large cap funds, one ETF which is in gold, and some more investment. So firstly, instead of having 2 large cap funds, we can have one single ETF which will solve our problem. We can have a flavor of flexi cap fund which will give diversification of mid cap and small cap in our portfolio. Instead of investing in gold ETF, we should use sovereign gold fund. Because our time horizon is more than 30 years, we will additionally be earning 2.5% of interest per annum, which will exponentially increase our returns. Looking at his present investment of 29,000 rupees per month at an expected rate of 12%, yes, we are supposed to reach a corpus of 10 crores, but looking at his present allocation, I think he should be targeting somewhere near 9 to 10% of returns and a corpus of 6.5 crores. So he has two options. First, he has to restructure his portfolio, or he has to increase his SIP amount. Whatever suits him needs to be done.
All right, let's move on to our other query, and this is from Anand. Now, so the query is from Charlie D'Souza, and the question is that he has a family business of bakery. Along with that, he works at a BPO. Annual income overall is around 10 lakh. He started his investments few years ago, and right now he's 30 years old, and no dependence on him. As of now, the kind of funds he has is PGM India Global Select Real Estate Securities Fund of Fund, 3,000 rupees there. DSP World Gold Fund, again 3,000 rupees. SIP HDFC Money Market Fund, SBI ETF Private Bank, and 3,000 each. These are the four funds that he has in his portfolio. And well, there are a lot of details missing in his question, Anant. But then, what should be the road ahead for him, considering he wants to be a long-term investor?
Firstly, he doesn't have a dependent on him. Secondly, he's only investing less than 20% right now. So first important advice is to increase his investment amount per month. At least increase it up to 20-25%, which is the bare minimum. Looking at his complete structure, we can figure out. When he's investing a good amount of SIP in money market fund. I think instead of money market fund, he can either choose a long-term debt fund or a flexi cap fund. Looking at his time horizon, probably he needs this fund maybe 20 or 30 years down the line. So keeping it in money market fund doesn't make any sense. If we keep our average return at 9%, our corpus will be somewhere around 2.1 crores. But if somehow we can properly manage our portfolio and increase our expected rate of return to 12%, our corpus with 12,000 rupees per month of investment can be somewhere around 4 crores. So the amount of corpus which we can get by properly structuring our portfolio is quite big. So we need to properly structure our portfolio. Firstly, instead of investing in DSP gold fund, better is to use sovereign gold bonds so that we can get additional 2.5% interest, as we have already discussed it. Second is he can have some flavor of flexi cap fund, and even he can add some small cap fund looking at his business.
So it's very important to have a co-portfolio, and then later on these kind of funds that he already has in his portfolio can be used for diversification or building up. But that will be all. Anand, thank you so much for joining in and answering the queries sent us by our viewers.